Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, August 24th, 2006. The market's just wrapped up, and I've got a 10-minute picture of the Nasdaq 100 Trust here on the screen, the QQQQ, each candle representing 10 minutes worth of data. We're looking at about 10 days worth of data right now. And what I've got drawn in here is, first of all, this low from a couple days ago, this level of support has been acting as resistance, and that's the level that I had pointed out yesterday, that saying that in order for us to kind of become a little bit more bullish about the market and less defensive here, that the Qs would have to get above and hold above $38.30 for at least a half hour or so. That did not occur today. We did see the market close right up near the top end of that range, so I think it's a matter of time. I think the market was pretty bullish today, all in all. The consolidation continues here on the daily time frame above a rising 10-day moving average. You can see that the 20-day moving average is about to cross up through that 50-day moving average, and this picture continues to act good. We had a low volume again today, and that's got a lot to do again with just the fact that it's a slow summer week before kids get back to school and stuff here in the next week or two. But the Qs continue to act strong. I think that initially we're going to see a move up above this 39.20, and then I continue to believe we're going to head up towards about 40.5. We have to continue, though, to be defensive and make sure that we're looking for idea opportunities on both sides of the market, long and short, and we don't want to get caught up in what could possibly turn around to the downside. But I have on this 10-minute time frame, I've also drawn in the Fibonacci levels from this recent rally lows up to the recent rally highs, and you can see that 38.2% retracement level is what's been acting as support. That's also where we have the rising 10-day moving average, and we're looking at a half-hour chart right now, each candle representing 30 minutes worth of time. So the market, in my opinion, it continues to act bullish. We've got to be a little bit defensive until it gets back above here and holds above there, and probably that 5-day moving average as well. So let's say we're really not back to green light until above 38.40 or so. But I think holding above 38.30, that's clearly a level that's being widely watched by others as well at that point. And you can see in here today we had a pretty choppy day. Really no pattern taking form that I can see. We've got these moving averages crisscrossing, which is a good sign. It means indecision. Indecision occurs before a turning point. So hopefully the market can muscle higher here in the next day or two, and we'll see what can happen on the upside. The S&P 500 also continues to act very bullish, holding above this prior level of resistance, which does act as support, along with the fact that we have the rising 10-day moving average. That makes it even more bullish, in my opinion. And then looking at a 10-minute time of the SPY, we can see in here that what I was looking for was a move back above 129.80, and we did get that. However, I think maybe I might have miscalled it a little bit and should have said maybe a buck above 130, because we've got that 5-day moving average there that's clearly acting as resistance, and if it can get and hold above 130, that's really what's going to be important for the S&P 500, and that could be the catalyst that leads to the next drive higher. And that next drive higher, again, we're looking for a test of these highs up here based on the inverted head and shoulders pattern that we've been looking at for the last month and a half, 2 months now. And as it broke past there, we take the height of this pattern and add it to the breakout point, and that gives us right up near those May highs. So the market continues to consolidate. The pullback is very shallow in here. The volume is not very significant at all, so the sellers aren't rushing in, and it seems like there might be bidders in the market and just an absence of demand right now. But if the buyers come back, it can rapidly push this market higher. You got to think about the psychology of the short sellers that have been trapped in this market. It's got to be more and more painful each day that the market doesn't pull back, and that leads them typically to maybe bid for a few shares And they don't want to chase the market higher, but maybe they're lightening their position by bidding for it, hoping that they can reduce a little bit of their exposure before the market takes off on them again. The Russell 2000 IWM, let's just change the scaling so we can see it a little bit better. We've been keeping an eye on this downtrend line and support near these rising moving averages at about $69 a share, and that's where we had a test today, and the market did close above those moving averages, so that's good from that standpoint. However, this this IWM is a little bit more bearish looking. I think it acts a little bit more bearish than the Qs and certainly the SPY. We really need to see this market get back above 70 for the small caps to get moving again, and you can see that it did have some recovery towards the end of the day. But we've got this 5-day moving average declining at a much more rapid pace, and that doesn't bode well. That makes me a little bit nervous. I think breaking another low in here tomorrow for the Russell 2000 could lead to a little bit more problem for the Russell 2000, and then probably the overall market as well. So we've got to be very careful and keep an eye on that IWM, the Russell 2000. Spiders. Let's go ahead and take a look now at the, we had been in New York Stock Exchange Group as a short, and I had recommend as a stop. We had gotten involved below 57.30. Our stop was at 56.90, and you should have been stopped out with a gain of about 40 cents in the NYX. Broadwing, BWNG, what we were looking for was a move above $11.20 today. That did not occur, so there should have been no purchase in there. NGAS, on this stock, we were looking for a move past 905. It got that move, and here's how you should have played it. It broke past the 905 on a gap, okay, but then it pulled back. As it pulled back, you don't want to buy it under that daily VWAP, and look how that daily VWAP was right here at R2 as well. But instead, we wanted to buy the stock right up here. So you should have bought the stock if you got involved at about $9.15 or so, $9.15. And right now, I think your stop probably goes just below this level, below this low right here. So we could say our stop goes at $9.10 for a risk of about a nickel. The stock looks good on the daily time frame. It broke this triangle, and I still think that it's got a move up towards about 10.5 coming for it. Next, we had Novellus NVLS, and what we were looking for here was an unusual type of entry, but it did occur. We were looking for a pullback down to $46 and I'm sorry, not 46, but $26.45. So 26.45. It pulled back to 26.45, but we didn't want to buy it on that pullback because look, it kept pulling back. Instead, we wanted to buy it as it started rallying back up above 26.65. So you should be in the stock at about 26.65 with your stop. I think I would probably even put it below this cluster of moving averages here near about 26.40. So you don't need to give it a lot of risk. Next up, we had two shorts. The first one was J2 Global, symbol JCOM. And on this one, what we were doing was looking for a short below 24.08. That was this level right over here. And we got that move early on. And what you should have been looking at in here, let me just take a look at something real quick. What we're looking at here is it got back above the daily VWAP right here, so we might have covered a little bit of it. If not, no problem. Our original short stop was 24.45. That stop wasn't hit, so you should have been involved in this one with your stop, I think, now going about 24.15 or so. So a little, maybe about 7 cents of risk right now in JCOM. Lastly, we were looking at Under Armour as a short sale candidate. And on Under Armour, we were looking for a move below $34.80. That occurred right here. Hopefully, you could have gotten some stock off. I wasn't watching it at that point. And our initial target was we were looking for $33 a share. As I've been mentioning, though, you want to keep an eye on daily S2. Look how it nailed it right there. You should have had a bid waiting near $34 a share. Grab a quick 80 cents in a half hour on part of your position. Now, if you're still in the stock, I say that the rest of your position should have a stop at break even or about $34.80. Thanks for visiting my blog. Be sure to look at that information about the free class I have tomorrow over at MarketWise. Go ahead and sign up for that, and I'm going to introduce to you the screener that I use called the Profiler. Thanks, and have a great evening. I'll be back again with another video with ideas for tomorrow later, too. Thank you.